everybody, it's Ian Beamer with Guaranteed Rate. Hope everybody's doing well. Hope everybody's staying healthy. If you could just like and subscribe to this video, it'd mean a lot to us. Please leave a comment below if you could. If you have any questions, comments, anything you'd like to see videos on in the future. We did start a campaign last week on our various platforms, on TikTok, Instagram, Facebook. Just trying to see what questions you guys had, what questions were out there and what you needed more information on regarding buying a home, interest rates, the mortgage process, the real estate market in general. And we got quite a few responses. So I was pretty excited to see that. I thank you guys for asking questions. It means a lot to me. Appreciate it. Without question, the number one point or item of concern from a lot of you was, at what point do you think we will start to see home prices correct? Is there a line that you can point at that says when rates go to X, home sales start to drop off? So I actually did a video last week about this question specifically, just because it was by far the widest concern that was shared amongst you is potential buyers. So I don't think we're going to see home prices decrease anytime soon. I think what we can hope for is that homes start to appreciate a little bit slower. So right now, we got the January numbers. January was insane. January for the Chicagoland market was up a little over 19% from January 2021. So that's the average sales price. So obviously that's huge and unsustainable. We can't have homes appreciating at 19% year over year. Pretty soon, none of us will be able to live here. So that's not sustainable. What we want to do is get home appreciation closer to the 3% mark is kind of the goal. That's the healthy. That's why, when you're at work and you get the quote unquote your cost of living increase, typically they'll increase your pay about 3%. So 3% is kind of standard rate of appreciation, rate of inflation in a healthy market. Obviously, the home prices at 19 are far above that. We want to try and bring that down. So we want to slow your interest or interest across the board in spending. So the way we decrease interest in spending is raise interest rates, make money more expensive. So therefore, there's less demand, hopefully. So we want to increase the months of supply. The months of supply as recently as March. We don't have the April numbers yet, but as recently as March, we were down to 1.7 months of supply. That means the average home in the Chicagoland market will sell in 1.7 months. And again, a standard market, a healthy market per the National Association of Realtors is about 5 to 7 months. So they're going to keep raising interest rates until we can get the average months of supply closer to that 5% mark. I would think they'll keep raising interest rates if months of supply is even at 4. So the rising interest rates is not going away anytime soon. Home appreciation is not going away anytime soon. But the goal is to kind of just slow that down. But the way we're slowing it down is increasing interest rates. So I think interest rates are going to keep increasing throughout the rest of 2022, possibly even into early 2023. Next question was, any predictions on interest rates for the coming year? Any chance they might go lower next year? Should buyers wait to buy? Which is kind of goes in line with that first question. I don't think buyers should wait. I don't think, again, home prices will be lower next year, but interest rates may start to come back in 2023. Stock market is not doing well because money is more expensive. So if the stock market's not doing well, that's a sign of a possible recession. There's another key component in the economy that kind of points to the fact that we may see a recession coming 2023. We have what's called an inverted yield curve in the U.S. Treasury market. So right now, the 5-year U.S. Treasury bond actually has a higher yield or interest rate than both the 10-year and 30-year U.S. Treasury bonds. So that's not normal. So just like when you buy a car loan or when you get a mortgage, typically the longer the term you borrow money, or when you're buying a U.S. Treasury bond or any bond, you're lending somebody else money. You're buying the bond. You can buy a 5-year bond, a 10-year bond, a 2-year bond, a 1-year bond, whatever you want. But typically the longer the term of that bond, the higher the rate, because you're lending that money, you're committing that money for a little bit longer. So the shorter the term you lend money or the shorter the term you borrow money, typically the lower the interest rate. So that's not what we're seeing. And again, that's not normal. That's called an inverted yield curve for the U.S. Treasury bond. So I do think we'll see interest rates dip in 2023. I don't know that we'll be in the threes. I don't know if we'll be in the threes ever again. Keep in mind that the country, since the start of Freddie Mac in 1971, had never seen interest rates below 5% from 1971 until 2009. So we are in the fives now, but traditionally, fives are still ridiculously low interest rates. I mean, we're coming off 2 years in the 2s and 3s, so it doesn't seem that way, but interest rates are still low. I do think we might dip back into the fours, high fours in 2023. But this is my guess at this point. I'm shooting from the hip. We're 8-10 months out. So another question: what does it mean to have an appraisal waived when you purchase a home? So if you waive the appraisal, you're committing to the seller that regardless of what the appraisal comes back with, and this is happening quite a bit because homes are appreciating so quickly that there's just not enough closed homes to support your sales price. So if you're buying a condominium in a 200-unit building and they all have essentially the same floor plan, if 4 of them have closed in the last month at $400,000 and you're buying your condo at $400,000, chances are your appraisal will come in at $400,000. That's not going to be an issue because we've got recent closed comps. They're in the same building, same address, same floor plan, assuming same finishes. We're not going to have an appraisal issue. The problem that we're seeing is especially detached single-family homes, and especially higher-end detached single-family homes. There just aren't many homes for sale, so there aren't many closed sales. So with homes appreciating so quickly, if a home goes up 2 or 3% in a month, which again, we saw 19% as of January, so 2 to 3% in a month is not unheard of. It sounds crazy, but it can easily happen. But if you can't support it with other closed sales, then the appraisal may come in under your sales price, even though you feel it's worth it. You're the buyer. The seller feels it's worth it. They're willing to sell it at that price. The appraiser may not be able to support it with comparable closed sales. Really, the only way to waive your appraisal is with a significant down payment. Sometimes through automated systems, and especially these days with more houses closing, we're in the spring market. So we do have more data. We are starting to get appraisal waivers again on automated underwriting systems. So that's one option. You may be able to waive the appraisal that way. Otherwise, I would not waive your appraisal unless you've got significant down payment. I would say 40% or more. So I hope that answers that question. Another question that came up: how long does the mortgage process take on a typical loan? So it does vary a little bit depending upon what type of loan you're applying for. Industry standards typically about 30 days. We are working on our systems here at Guaranteed Rate to have all loans processed in 10 days or less. There are certain programs that it's a little bit harder to do that with. Construction loans are one product that jumps out. Obviously, and I'm not going to get into the whole specifics of a construction loan, but you've got to have bids from contractors finalized before we can even order the appraisal. So just that part typically takes 30 days. And then once you've got those bids finalized, we can move pretty quickly. But IDA loans, Illinois Housing Development Authority, the down payment assistance programs, those sometimes take a little bit longer to process. But typically about 30 days is standard. We're working on our systems to get all loans processed in just 10 days. So got a state-of-the-art system that's trying to automate everything possible, including income verification. You can verify your assets electronically, just with a click of a button. It's pretty high-tech, pretty slick. So we are definitely ahead of the curve there. Another question, which is better, an adjustable rate loan or a fixed rate loan? Okay, so it depends how long you plan on holding the property. Most of these questions are, well, it depends. What's better for you might not be better for the next person. So you want to look at how long you're going to hold on to the property and what the margin is between that adjustable rate loan and that fixed rate loan. Is it worth $100 a month saving to risk, the rate fluctuating in 7 years? Well, if you know you'll be transferred, if you know you've got a growing family, if you know you'll have to move for whatever reason in 5 years, then you're not worried about what happens to your interest rate in 7 years. But if this is a home where you think you're going to be here long term, then you got to consider that risk. And again, I do believe interest rates will be a little bit lower. We should have a refinance opportunity at the end of 2023 or some point at the end in 2023. So adjustable rate mortgages may be a good option these days. Same with FHA, but FHA again for single family homes for the most part. Condos are quite a bit harder. What is an appraisal and do I need one? So odds are you will need an appraisal. About 90% of loans do need appraisals. 2021, we probably had about 30%, 35% of the loans run through automated systems get what's called an appraisal waiver or PIW, property inspection waiver. So that just means when we submit the loan through Fannie Mae or Freddie Mac's automated underwriting systems, they generated a value based on recorded sales on some algorithm saying the purchase price is supported. We believe the home is worth it. You don't need an appraisal, which saves you money. But assuming we do not have that inspection waiver through that automated underwriting system, all loans need at least one appraisal. Sometimes jumbo loans, especially jumbo loans over $2 million, require even 2 appraisals sometimes. So an appraisal is just an independent third-party valuation of the property value. So an appraiser goes out and looks at the property. It's not the same thing as a home inspection. I get that all the time. Your inspector is going to check your appliances, check your roof, check the insulation, make sure everything's in working order. The appraisal doesn't do any of that. Maybe in an FHA loan, he checks the utilities to make sure the utilities are on and functioning. Other than that, he's looking at square footage. He's looking at the flow of the home, the utility of the house, the number of bedrooms, number of bathrooms, lot size. Do you have a fireplace? Do you have a deck? Do you have a patio? Do you have a garage? How many cars? How many cars can you store? And then he compares your information to recent sales, typically within the last 12 months and within 1 mile of the subject property, and then tries to determine a value based off those other closed sales. So that's what an appraisal is, and chances are, yes, you will need one. Do I need to qualify for a loan? So there's 4 parts of a loan. The first part is the collateral, and that's the home you're buying, so the appraisal. That's the first part. Second part is credit. So conforming loans, perfect credits, anything 740 or better. You can go down to a 620 for a credit score. FHA lets you go down to a 580 credit score. Jumbo loans typically want to see credit scores even higher than 740 if possible. 780, even 800 sometimes get you little breaks in rates and pricing. So there's credit, there's collateral, income. So we've got something called a debt to income ratio. So you've got to look at the proposed housing payment plus all your other debt divided by your monthly income. So typically we don't want to see more than 43% of your monthly income go towards the proposed housing payment plus all the other minimum payments on your credit report. So that's the income part. And then the fourth and final part is your down payment, your assets. How much skin do you have in the game? How much are you putting down? That's it. That's what you need to qualify for a loan. You need a down payment, you need income, you need credit, and then a property that's supported by that sales price. What's the difference between pre-approval and pre-qualification? Great question. So a pre-qualification is when you call me or you email me, and we have a conversation, and we kind of just go over some numbers on the phone or via email, and generally we give you an idea of what your monthly payments are going to be and what you can afford. A pre-approval rather is when we run your credit report and we submit your file through the automated underwriting system, either Fannie Mae's or Freddie Mac's or both. We have to make sure that Fannie Mae or Freddie Mac have determined that you are eligible within the ratios, with your credit scores, with your assets, with your income to support this proposed housing payment and that you're going to get approved. So there is a huge difference between pre-qualification and pre-approval. How much should I save for down payment? So if you're a first-time home buyer, and I'm guessing this is for first-time home buyers generally, so a conventional loan will let you put down as little as 3%. You can possibly qualify, you may qualify for down payment assistance program, which may let you put down even less than 3%. FHA loans will let you put down as little as 3.5%. If you're not a first-time home buyer, FHA will still let you put down as little as 3.5%. But the minimum down payment for Fannie Mae and Freddie Mac is 5%. Jumbo loans as well require at least 5% down, if not more, and it depends how far into the jumbo realm we are getting. Certainly once we cross $1 million or so, I think we need at least 10% down, and you know, if you go up to 2 million, it goes up from there. So hopefully that answers that down payment question, but great question. Should I refinance my mortgage loan? Again, I'm going to default to it depends, but in the current environment, as of May 2022, probably not. You know, it depends on what situation you're coming from, but interest rates are up. Interest rates are up about 2.5 percentage points from the start of the year. So we started the year around 3%. We're up around 5.5 right now. So if you're coming off any loan that you got in 2020 or 2021, you probably want to try to hold on to that loan. Chances are the interest rate is lower on what you have now than anything we can get you on a new mortgage, but depends on your situation. So it's probably worth a conversation. Give me a call, shoot me an email, leave me a comment below. Be happy to discuss that with you. How long does it take to close on a house? I think this goes back to the previous question. How long does it take for a mortgage to get processed? Industry standard, again, is 30 days-ish. Sometimes larger banks, maybe online companies, might take a little bit longer. But again, guaranteed rate, any local lender will probably be a little bit faster than 30 days, and guaranteed rates working on 10-day standard across the board. We want to turn around all loans in 10 days. We're even working on a program. I kind of alluded to this when I answered the question before, but a 24-hour CTC. So right now we've got about 30% of the loans that come in, conforming loans that are eligible for this. And again, this takes automated income verification, asset verification, automated underwriting approval, credit pull, the entire loan, CTC in 24 hours. So most of the time obviously you need an appraisal waiver to get that. So we can move pretty fast. We're pretty good at this. This is all we do. We do residential mortgages. Been doing this a long time. I've been doing this 22 years. Guaranteed rate's been around for 22 years. We'd love to help you. Appreciate you checking out my video. Please like and subscribe. Leave a comment below. Let us know what you think. Let me know if I missed any questions. Hope you're doing well out there. Look forward to hearing back from you soon. Have a great day. Bye-bye.